Warren Buffett, Charlie Munger, Lee Lu, Guy Spear, and Prem Watsa. These are just some of the super investors who have Bank of America stock in their portfolio. Bank of America is Warren Buffett's second largest position, making up 9% of Berkshire Hathaway's stock portfolio. Berkshire Hathaway is the largest shareholder in the business, owning 13% of Bank of America. With Warren Buffett recently selling Berkshire's other banking stocks, it's safe to say that Bank of America is Warren Buffett's favorite bank. But not for the reasons that you might think. We're analyzing Bank of America, stock ticker BAC, to see if its market price is a fair value. We're using the Select 6 analysis to look at the most telling financial metrics before estimating an intrinsic value for Bank of America. Then we're giving a final rating to the business. There will be two key bonus metrics along the way that just might be the tipping points when analyzing Bank of America for your portfolio. Before we get into these valuable metrics, let's understand Bank of America's stock performance. Right now, Bank of America trades for $28.11 per share. In the last year, their stock price is down 18.5%. Currently, Bank of America pays a 3.06% dividend yield, which would be in addition to these returns. In the last 5 years, Bank of America's stock price is down 8% overall. In the last 10 years, Bank of America is compounding at 8% annually. Going back prior to the global financial crisis, Bank of America's stock price is still down 40% from where it was at in 2005. The company has both restructured and rebounded since its lows during the global financial crisis, when Bank of America made some costly acquisitions in both Countrywide Financial and Merrill Lynch. Their average dividend payouts throughout this time is in addition to these returns. Bank of America, with the ongoing crisis in regional banks, trades just $2 above their 52-week low. The company is down $10 from their 52-week high. Just over 1% of their shares are sold short. Bank of America is one of the largest banks in the United States and one of the largest banks in the world. They have a $227 billion market cap. But the burning question is, why is Bank of America one of Warren Buffett's favorite stocks? Bank of America is one of the largest financial institutions in the United States with more than $2.5 trillion in assets. It's organized into four major segments: consumer banking, global wealth and investment management, global banking, and global markets. Bank of America's consumer-facing lines of business include its network of branches and deposit gathering operations, retail lending products, credit and debit cards, and small business services. The company's Merrill Lynch operations provide brokerage and wealth management services, as does U.S. Trust Private Bank. Wholesale lines of business include investment banking, corporate and commercial real estate lending, and capital market operations. Bank of America has operations in several countries, but is primarily U.S. focused. Also worth mentioning is there was some noise around Berkshire Hathaway's 13F filing for the first quarter of 2023. While on their filing, it looks like Berkshire added to its Bank of America position during this time. This is actually not the case. Few people read the disclosure from Berkshire along with this filing, but for one of the first times, Berkshire Hathaway is including securities that were formerly owned at General Re's New England Asset Management. What looks like recent activity for Apple, Bank of America, and HP were already owned in the New England Asset Management portfolio. These are consolidated in Berkshire's 13F for the first time. Starting with metric number 1, we want Bank of America's average 5-year PE to be below 12.5. This PE is about the historical average for banks. Bank of America's PE has fluctuated pretty significantly over this time. They hit a low coming in as cheap as 6.5 times earnings in spring of 2020. The company had a PE as high as 21.5 times earnings in spring of 2021 as they rebounded very strongly. Averaged out over this time, the company has traded for about 12.4 times earnings. This is just barely sneaking in there below the benchmark we'd be looking for, meaning this is a check on metric number 1. Right now, Bank of America has a PE below 9. Metric number 2, we want Bank of America's average return on equity during the last 5 years to be above 9%. Their returns on equity have been pretty steady with the exception of 2020. What is good to see about that year, however, is that the returns on equity did not completely crater. They still earned a respectable return on equity during that global hardship. Averaged out over this time in a given year, Bank of America earns about 9.9% average returns on equity. This is about a percentage point above the benchmark we'd be looking for, meaning this is a check on metric number 2. Metric number 3, we're looking for 5-year revenue growth. Bank of America has grown their revenues from $87.7 billion in their fiscal 2018 to $92 billion today. Another check here on metric number 3 with about 8% revenue growth. Metric number 4, we're looking for 5-year earnings growth. While their net incomes took a dip in 2020, they have grown over this time. Bank of America's net incomes are up slightly, growing at 1.7% when we include their last 12 months worth of numbers. In a given year over this time, Bank of America earns about $26.6 billion. We'll come back to that number later, so put it in the bank for now. This is another check on metric number 4. We're perfect so far on Bank of America. Metric number 5, we're looking for deposit growth in the last 5 years. During this time, Bank of America has grown their total deposits from just under $1.4 trillion in 2018 to more than $1.9 trillion in 2022. They've grown deposits by 38%. While on the surface, this looks like this could be amazing, one of our bonus metrics is going to be very telling when it comes to their deposit growth and is one of the key safety factors that you want to analyze when looking at any bank. We'll touch on that later in the video, so stay tuned. Metric number 6, we're looking for decreasing shares outstanding. A well-run bank is eventually going to need an outlet for its capital. Typically, this comes in the form of making acquisitions, buying back their shares, or paying dividends. Bank of America, as no exception, has used their earnings to repurchase around 20% of their shares in the last 5 years. They've slashed their share count outstanding from 10.2 billion in 2018 down to just under 8.2 billion in 2022. These are huge share buybacks, and this could be a great sign for long-term shareholders in the business. When a business buys back their shares by decreasing the number that they have outstanding, they're increasing your ownership percentage in the business, which ultimately increases the percentage of the business's earnings you're entitled to without you having to spend a dime. With another check here on metric number 6, we're perfect 6 for 6 on Bank of America. Metric number 7, we want their interest expense on deposits as a percentage of total deposits to be decreasing or staying the same in the last 5 years. Bank of America's interest on deposits was about 1.3% of total deposits in 2018. This has grown to being 1.7% of total deposits in 2022. While this is slightly up, this is not necessarily unexpected, as interest rates have risen in the last couple of years. Even though this may not be unexpected, this is our first X of the day coming in on metric number 7. Metric number 8, we're looking for non-interest expenses as a percentage of deposits to be decreasing in the last 5 years. Bank of America's non-interest expenses made up about 3.8% of total deposits in 2018. This shrank in the last 5 years, and this makes up 3.2% of total deposits currently. This is a huge operational metric for a bank. It offers a more conservative way of estimating a bank's efficiency ratio, and this is a big check on metric number 8, as Bank of America has increased the efficiency of its operations in the last 5 years. Metric number 9, we want the percentage of their deposits that are coming from institutional deposits to be decreasing in the last 5 years and ideally be as close to zero as possible. This is because it's simply easier for institutional deposits to flee a bank than it is for the same amount of retail deposits. There's fewer decision makers and more counterparty risk by taking on institutional deposits. While Bank of America had institutional deposits in both 2018 and 2019, they've slashed these and they don't make up any of their total deposits today. This is a check on metric number 9 and could bode well for Bank of America's deposit base. Before we get to our 10th metric, it's time for our first bonus. We're looking at Bank of America's dividend profile. Right now, Bank of America pays a 3.06% dividend yield. This is well above the dividend yield you'd receive from an S&P 500 ETF. However, people make mistakes all the time by blindly chasing dividends. It's important to stop and look at the underlying fundamentals of a business to see if a company can support its dividend payouts. As a bank, we want Bank of America to support their dividend payouts with their earnings. In all 5 of these years, that's been the case. Bank of America has grown their dividend payouts per share, and they've also grown their earnings per share during this time. Their earnings have easily covered their dividends, with the company paying out just 43% of their earnings as dividends in the year that they had their highest dividend payout ratio in 2020. While this is a snapshot of their last 5 years of performance and it's no guarantee, it seems like Bank of America is healthily able to support their dividends, and their dividends are covered by their earnings right now. The big metric of them all, metric number 10, we want Bank of America's market cap to be below their average 5-year earnings multiplied by 10. If this is the case, this offers a reasonable starting point for a valuation of Bank of America. Right now, Bank of America has a $227 billion market cap. In the last 5 years, if you remember going back all the way till metric number 4, Bank of America earns about $26.6 billion in a given year. When we multiply that by 10, that comes out to about $266 billion billion, which is about $39 billion above Bank of America's current market cap. Keep in mind this is just an estimate and it's not financial advice. This is a check on metric number 10. Bank of America checks 9 of our 10 boxes, and now it's time for a critical bonus metric that could really be the difference here. As our final bonus, we want Bank of America's median 10-year returns on equity to be growing faster than their 10-year CAGR on their earnings assets. This is a critical banking safety metric. In fact, this was one of the ways that you would have been able to spot Silicon Valley Bank before it failed, as their balance sheet was growing at a much faster rate than their returns on equity. Bank of America has 10-year median returns on equity of about 6.8%, and their 10-year CAGR on their earnings assets was about 3.7%. The company also had a 10-year CAGR on deposit growth of about 5.7%. Both of those are below their returns on equity. This is a check here on our bonus. This looks great for Bank of America. So far, we focused a lot on the numbers, but Warren Buffett gives just as much, if not more, emphasis on the qualitative aspects of a business. There are more reasons why Bank of America is Warren Buffett's second largest stock position. Starting with the qualitative points supporting a potential long thesis for Bank of America. Number 1, Bank of America is seeing exceptional digital adoption, and there still seems to be something left in the tank for expense savings, potentially helping the bank better absorb inflationary expense pressure. Number 2, a strong economy and higher rates are all positives for the banking sector and for Bank of America especially, with its outsized rate sensitivity, which should drive superior earnings growth. Number 3, Bank of America is poised to succeed on a nationwide scale, and there seems to be no structural reason it can't be one of the strongest banking franchises going forward. Then the key points supporting a potential short thesis. Number 1, with a boost from higher rates potentially played out, a looming recession risk on the horizon, and potentially limited fee growth, it's hard to identify a catalyst for the bank. Number 2, Bank of America has been cutting expenses for years. The low-hanging fruit in this realm has likely been picked over. The bank has struggled to hit the efficiency ratios of its top peers, and expenses are now starting to creep up again. Number 3, rate sensitivity is a double-edged sword, as is leverage to the state of the economy. If the economy ever falters and rates are cut, be mindful for the downside for Bank of America. There you have it for a balanced perspective of the qualitative aspects of Bank of America. Now it's time for our final rating of the business. In analyzing Bank of America, stock ticker BAC, there were key strong points for the business, including above average returns on equity, growth in their revenues, deposits, and earnings, 20% share buybacks, increased efficiency, and a better deposit composition. The bank also looks like it's trading for reasonable valuations, with some potential margin of safety in the business. Warren Buffett also made some comments about the bank at Berkshire Hathaway's annual shareholders meeting. In the meeting, Buffett seemed lukewarm on the banking sector as a whole. However, he noted that he was the one who had approached Bank of America originally, and that was a different situation from some of the other banks that Berkshire had cut from its portfolio. An ongoing position in the bank, while it may make sense based off their fundamentals, also has something to do with Warren Buffett's business reputation and public image. So that's something to be mindful of. Even with that, Li Lu recently added to his Bank of America position in the first quarter of 2023, and that seems to make up about 3% of his total assets under management. With all the factors of our analysis combined, Bank of America looks like a very strong candidate for further research. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, comment down below what business you want me to look at next time, bank or otherwise. Thanks for learning about Bank of America with me, and have a great day.